Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 10th of April, 2018, time about 1:35 p.m. Central Daylight Time. There wasn't really a lot of events taking place in the agriculture markets today. We did see that the ending stocks reports came in. A lot of traders I know at our firm still think the government is shy. They're not using the right usage, and they are expecting that if anything goes wrong with crop planting early in the season, we could add quite a bit to all the crops in the country. So that gives one idea. We're looking at a stock market that has regained what it lost yesterday after the FBI raided the home and office of one of President Trump's lawyers. Metals, fairly firm tone, but you can see the copper market, the strongest part, and part of what's helping the beans is there was a good tone today from Chinese President Xi's statements at one of the forums that they hold in Asia about trade with the U.S., and it appears that there are some talks going on, so you see the market changing its tone ever so slightly. No breakthroughs on the trade, but that's the ideas that are going on. At least the two countries, U.S. and China, seem to be talking through some channels of some form. As you can see in the weekly chart of closes on beans, you are up 16 1/4 in the first 2 days of the week. The market's still in what I call an up-thrust mode. It's over the 18-week average of closes as well. The daily chart, this is the 18-day moving average of closes. The market's over that. I'll call that an up-thrust as well. And you've come straight on a closing basis from 10.15 1/4, and this is the high close we've had now, about 35 cents higher at the 10.50 level. What the market is trying to do, I think, on this current run is come into the resistance points that we had here. When the market got into the 10.80 level, fell back almost $1 a bushel, and has since come back up a little bit. The close wasn't that impressive. It was in the lower part of the day's range. However, we did end up making a higher high. Now, this is that same chart we're looking at, and I put on it the swing line study. In my charting course, one of the things that I teach, and I'll talk about that at the end of this tape, is how to use swing lines and how to actually draw them by hand, but we've put them into our charting software versions to make it easy for you. And the idea of a swing line is to see, are you developing a trend? If you defined a trend to the upside as having higher lows and higher highs, which this does, you have your higher lows, and certainly from that high to this high, higher highs. What is the risk associated with the trend? Well, if one were to buy here and put a stop under a number that would break that pattern, it would be back under 10.03, so that's 47 cents, a heck of a risk. I filter the swing line with moving averages. If the market is over the 18-day average and the swing line is up, it's all systems go on the buy side without taking into account oscillators, where the Bollinger Band is, and other parts. In other words, I use filters to build on. And in this case, you can see higher highs, higher lows over the 18-day moving average of closes. The 18 is also over the 100-day. Now, when we broke back a week ago, you went through the 100, but going through the average wasn't as important as that it was holding it on a closing basis, then came back up to challenge the 18, and now the market is moving back out to the upside. Again, it doesn't hurt things that China and the U.S. are at least talking a bit. When you take a look at the Bollinger Bands, keep in the back of your mind that they are these black dashed lines on the chart. They do not run parallel. The idea of a Bollinger Band, and the way that I teach it, is that the first thing it does when you hit it, be it to the downside or to the upside, it offers a resistance point, and lots of traders apparently use that because you see the market back away. It'll stop there sometimes too. Can you run further? Absolutely. But often it's the first stopping point on a chart, and from there the market decides what it's going to do. I'm using the word often, not always either. When a market is over the band or under the band, the odds of staying above or below are only 5% of the time. And when you have consecutive moves, either under or over, those numbers shrink even further. What I see the market more or less doing is sideways action. You'll notice in green the 100-week moving average of closes in the upper Bollinger Band and the lower band in the 100-week are just about on top of each other. Basically, a sideways move when you take out the extreme of getting over or under the Bollinger Band. Momentum-wise, we are very overbought. So I view the market as three things actually. Number one, in an uptrend. Number two, the market has run up and hit one of the top objectives, the upper Bollinger Band. I think professionals were taking money off the table there, and the market is overbought. In the meal market, yesterday you got to the upper Bollinger Band, as you can see, and today you broke back from that. In fact, it was a pretty good-sized break today. $5 is not a small amount of money. And given that the market is thinking that what you really need is the meal component for the export because of the Argentine tightness of situation due to their drought, that's a fairly interesting thing to be looking at. Also, the overbought condition in the market. You'll see these numbers. Anytime a market gets over 70 on the slow stochastic or under 30, I consider that to be either an overbought or an oversold condition. It can convert itself, and I teach that in the charting course as well, where you can lock in a bull trend move or momentum to the bull trend or momentum to the downtrend. Got to see which way it's going, and I teach that too. And if we get some charts here, we might see it down the road or in one of my other videos today. In terms of soybean oil, there was an unwinding of the crush spread. What I mean by that is the meal down 5 and suddenly the soybean oil pops up on the market. It has been the opposite. It has been the meal that's been in demand, not the oil. Notice where the market stopped. You have Bollinger Bands top and bottom for support, resistance, and the midpoint is often. Word is often. They don't run parallel. The 18-day average of closes, which is a neutral zone in the market. Markets like to go to neutral zones to figure out what to do. Now, as I showed you earlier, I thought that the soybeans were developing sideways action. This is what you call the sideways action. I think you can see it when you look at the Bollinger Band. Momentum is trying to turn up. The market stepped out of a downtrend in this market today, too. Now you don't have any longer, and I'll take this off the chart, you had lower highs and lower lows. Now I have the arrow pointing up because today's high took out this previous high. You've stepped out of the trend, at least as I define it. In the corn market, first thing my eye goes to, and you will train yourself to look this way if you get involved in my charting course, is I have an overbought market. I have the market with double bottoms at 372. The recent high here took out that high, so I'm in an uptrend, overbought. The market wasn't able so far to get up to that upper Bollinger Band, and it might be ready to get a corrective move in place because it's overbought, not a bear trend. In the wheat market, this is the situation where a market gets up and over a Bollinger Band yesterday, closed over it today. Now remember what I said. 5% of the time is the theory behind Bollinger Bands that the market will close outside or below the band. It'll stay within the bands 95% of the time. I came up with my own analysis whereby I look at each consecutive day and I subtract one of those percentage points, which should lead you to the logic of saying, well, Ira, what if you go beyond 5? Can you get beyond 0? Because that only gives a 3% chance tomorrow of the market staying over that. And the answer is yes, of course. You can go more than 5. You go count them on the charts and see how often. It's rare. By the way, pulling back under a Bollinger Band does not mean the trend is going to change. It's just this is where the pros look at the market and say to themselves, is the market ready to really explode to the upside, or maybe this is an area where it's getting a little bit ahead of themselves. That's how I teach that particular indicator. I see strong support down here. We have a drought condition going on. We had extremely cold weather over the weekend in the hard red winter belt. We have not seen the impact of that yet. We'll get that next week as to what it did to the crop damage. In the sugar market, This is a recent low that we haven't been at in a very long time. This market is very bearish in terms of lower highs, lower lows. Notice how long it has stayed under the 18-day average, literally the whole month of March, now into April. What's the importance of that? When a market stays under the 18-day average of closes, even if the swing line tries to turn up, the bias, as I define it, stays down. When you're under the 18-day average, your bias is down. You're looking for reasons to be short. When you're over it, you're looking for reasons to be long. That doesn't mean those reasons take place, but it switches your thinking. It's a filter on your other tools. This market is also very oversold. Coffee market. Now it's playing a game against the 18-day average that it's been doing for quite a while. The market has found it much easier to break than rally. Is this a change in that thinking? Well, that's what we're all looking at. The momentum of the market turned up the past few days, but it has stalled out against the 18-day average. While the swing line is up, because you're closing under that average, the bias is down. In order to turn the bias back up, you have to get back over that average. Then if momentum turns with it, maybe the market for the first time in a very long period since the beginning of the year can make a run back to that upper Bollinger Band. Right now, no way to tell. In the cocoa market, look at the sideways action. It's like you're spinning within a tube here looking to see what the next direction is going to be. The market had a very nice bull run from February right on through the end of March, and it has since backed off. And while we know that there's been some problems and there was trying to get the cocoa bought, it's been problematic. I even heard that Hershey Company has come under some pressure because cocoa prices were rising. In the cotton market, you have a pattern of a lower low, a higher high. The market did make a run for the 100-day average, couldn't go anywhere. It immediately snapped back and then popped out of any trend that it had, and it seems to be going, just like so many of the other soft commodities, sideways, not doing a lot. In the cattle market, we're still very much into the bear phase. This all began way back here when we started getting bearish cattle on feed reports as grain prices were cheap and the ranchers were finishing up more cattle and moving them into the feedlots. Well, now the problem is you got to start looking ahead and saying to yourself, what about the barbecue season? Is that going to see this market make a change? So far it hasn't. Momentum is up, but the trend is down. The bias is down. The bears control this market unless yesterday's high, which came out to be 104.60, is taken out. And if the market continues down, it's possible you make another run for that under 100 level. In the feeder cattle, battleground is the 18-day average of closes. I contend that short sellers are trying to defend themselves at this 136, let's call it 136.67 and a half level. They don't want to see prices over 138.57, and so far they're controlling the market. Last, the hog market. Hogs came alive when word was that maybe China and the U.S. are talking. They were in pretty much a free fall, as that was one of the products that the Chinese had said they would place tariffs on. Well, as the talks take place, maybe those tariffs won't happen and you've had to bounce away from it. Trying to play these tariffs is difficult, but I don't. What I try to do with you is teach a method of trading. Now, what I do in my courses, there's 6 hours of videos. In those videos, I walk you through the different studies that I teach. The swing lines will be there, the moving averages, the slow stochastic studies, every part you're seeing, and one you don't see, which was the window envelope that I just mentioned, which is a profit-taking tool. Each one of the videos begins with a PowerPoint where I teach you how the indicator works. Then I take you to actual charts in the back, and you get the data with the charting course. So you can go back and you'll follow me day by day so you start learning that indicator. Think of this as stepladder. Each part builds on the next. I'm not interested in you racing through the course. I'm interested in you learning from the course so you learn how to put a chart together. Then in the mornings, I'll walk you into and give you a daily video where it's a refresher, and what I've begun doing again is holding live webinars for my students so they can come in and ask me what to do. The course includes free charting software. It's included in the price. If you buy the charting software on your own, it's about $80 a month. It's included in the course, along with my market research, the videos, everything that I know. I'm trying to help you with it. The whole price, $129.95. I don't think you're going to beat that for a pretty reasonable deal. You can call my staff. They'll explain it. You can go to our website. Under the word education, you'll find it. You can click up here and you'll come right to the area. I have a video with FAQ page that answers all the questions you might have. I'm Ira Epstein. Thanks for watching, and I'll see you all in my other videos later today.